Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at some earnings reports coming out this week, as well as the market overall. Right now, fear and greed, we are in extreme greed. CNN has us up at 78. Pi vesting, a site I like a little bit more, has us back into extreme greed as well. So we did get up over 80 in greed, came down, and are coming back up. We'll see if this creates a lower high and then we start trending down towards the second quarter of this year. So, as far as earnings go, any of these stocks stand out to you? Maybe open up your trading view and check and see what the charts look like. I'm going to go over some of the stocks that I like, stocks that I use, or stocks that I know are very popular with people. So maybe today we'll take, we already took a look at Berkshire last week, but maybe we'll take a look at Domino's, Zoom. Every time I say I'm going to diet, I'll be going a month or two strong and I'll be like, I crave pizza quite a bit. I have a Roomba. I like it. Let's check out its stock. Lowe's, we had Home Depot last week. We can check out Lowe's. AutoZone, they've always been a solid company. Cracker Barrel, never gone there. Don't plan to. Any others that stand out to me here? AMC, that tended to be a meme stock, along with GameStop a couple of years ago. And let's see, SoundHound. We looked over SoundHound because it was a big AI stock, and we'll see what SoundHound's doing. Maybe Fubo TV a little bit. That there's some streaming services on here, so maybe we'll check out a couple of those. So we'll go back and forth between this. As far as the markets, well, we've been in a strong uptrend since October of last year. And something you guys probably already see, I have this channel here and I've just drew this because since the great financial crisis, from when we dipped and then these peaks that we kept hitting, I drew this channel to see where we might move up into it as well as come down. And something else you might notice is right here, I had to draw an extra trend line. And even COVID honored this a little bit when we had the COVID dump, is that we've been hitting this lower channel for some time. Before then, you see that dotted line, that's about 50% up through that channel. We've been bouncing off that a lot when the market was doing really strong, and when there was weakness, it started to dip back down a bit. So this is the first time we're above this 50% line since August of 22, and that was on the way down from this peak here, and we didn't see a peak up in that area of the channel since December of 2014. So we haven't gone up to these levels in some time, at least above the 50% range. The highest part of that range, if we were to get all the way up there, would take us, and I'll stretch this out a little bit, somewhere in the mid-high 6,000s, maybe even to 7,000 if we get there by January of 2025. Do I think the stocks are going, or the S&P is going to get to that level? I do not. I think there are some areas of concern that I'm keeping an eye on. Not that markets can't keep running, but one thing I saw recently is that we do have the RSI overall getting lower, price getting higher, at least on the daily. That is bearish divergence. Just something to keep an eye on. We can have bearish divergence and still go up in price quite a bit. So all because you hear someone say, oh, there's bearish divergence because the RSI is lower, that can still come into play down the road. So just something to keep in the back of your mind. As far as the volatility of the markets, it's starting to curl up in volatility, but historically, we're still pretty low. One indicator or chart I like to look at, the VIX divided by the VVIX, whenever we are down here is when markets are running hot. when we are moving up, and this is if you do the VIX divided by the VVIX, so that's the volatility of the volatility. When we are up here, it tends to be lows in the markets and good times to buy. So, and then anything else I want to look at? Oh, as far as possible doom and gloom scenarios, this is an inverted yield curve. Typically, after we uninvert and go back above the zero line, within some matter of time, 6 to 12 months, we start to see a recession. So this was September of 19. As you guys know, March of 2020, we had a big recession there. Let's zoom out here so that we only got inverted briefly. January of 07, 06, obviously great financial crisis. 2000, here we had the dot-com bubble. So people are saying bubble since 98. Remember what I talked about with bearish divergence? People were saying bubble in 98, and we still went on for another 3 years of going up. Will we go through that again? That waits to be seen, but just something to keep in mind. Anyways, let's get into earnings. And if I sound a little sluggish, I apologize. Just fighting off a little bit of a cold here. So let's start off with Zoom. So something that I want to share with you guys, when I'm looking for stocks, I've talked about this before. I like stocks to be ones I like and ones that I use. And sometimes looking at these earnings reports remind me of certain stocks that I haven't thought of looking at before. So, for example, I'll never forget is a couple of years ago, I was watching some stock video and they mentioned Visa. And I thought to myself, why the heck am I not investing into Visa? I have Visa cards. I like their product. I use their product. So sometimes all you have to do is take a look at the clothes you wear, the watch that's on your wrist, the shoes you put on. Some of these stocks are staring you straight in the face, and you kind of take them for granted because you use those products all the time. So just something to keep in mind. Kind of like Zoom. Maybe you use Zoom for work. Zoom, that was a big post-COVID stock. And if you bought Zoom back here, it ran from the high 60s, almost at a 10x, and it's been falling down ever since. So might this be an area of value to buy? Sure, maybe for the long term. As you can see, the strength is curling up and the price is going down. So you could say bullish divergence. Let's take a look at some of our indicators. Oh, I have the SMA on. I have the free version of TradingView. So as we zoom in, as you can see here, we have a lot of chop, a lot of accumulation. One thing that is concerning to me as I zoom in is we are making lower lows. I would like to see Zoom start to make higher lows before I confirm a buy. So I do like this, how there's a lot of accumulation going on. However, we are making lower lows. And let's zoom out to the monthly. Yeah, the monthly. Yes, we've been getting a lot of chop around here, but we are still going down. So is this the worst place to buy Zoom? I don't think so. If you dollar cost average in here, I don't think that'd be the worst idea. We were at these prices before it ran up. However, if you did buy Zoom here, I think you would be trusting that this company is going to be around another 5-10 years, and you might have to forget about it for a little bit until you see the sucker come back up. So keep an eye on Zoom. It is showing some value right now. It is market capped or valued at 19 billion. So if you believe Zoom can be worth more than 19 billion, then hey, maybe you could dollar cost average in. Let's move on. What else can we take a look at? Domino's Pizza, DPZ. I'll be honest, I never knew that was their ticker, DPZ. So Domino's, what do we notice here? If we zoom way out, this looks like it's been a pretty strong stock since the great financial crisis. and it looked like it IPO'd somewhere in here in '04. So this is a nice run up here. I won't measure from the exact bottom, but if you got Domino's at around 5.5 and held on to it to this peak, look at that. Almost 10,000% returns. That's pretty good. You do see overall this RSI weakening over time. And guys, again, bearish divergence. But if you would have been selling bearish divergence, you would have still been missing out on a lot of gains that happen. So, it's just one thing to take with a grain of salt. Right now, it's on the monthly. We did create higher lows. You can see this long-legged doji candle. They can be red or green. When they're like this, we can move big in either way. And we went from 366 to 427. So Domino's overall looking like a pretty strong stock. When we go to the weekly, you can see here how we are creating lower lows and then started to come up out of that. So this would be a chart where if you threw on some volume and you saw that a lot of volume was coming in as we are going up in price, then there's a lot of money getting behind Domino's pushing it up. So since this weekly signal here, 350, we've gone up to 430. And if you would have just been buying weekly signals, 20%, not bad. So we'll see overall what Domino's is doing. Maybe here was a local low for a while. As you can see, kind of similar to back here, moved up a little bit. It almost looks very similar, this whole descending wedge here before it moved up. So Domino's, the stock looks good. It's valued at 15 billion. Would I be buying Domino's right now? No. I would be looking for a play after a monthly sell signal and for things to reverse. So if you would have bought in either of these two spots, I don't think that would have been the worst. Let's move on. Robot. I wanted to see what iRobot is doing. And what's the ticker? IRBT. Again, apologize for my illness. Oh my God, iRobot. This does not look good. So this thing fell off recently, January of 24, and it has a market cap of 324 million. So yeah, this is not a good looking chart. Some of you might take a look at this and think to yourselves, well, hey, it has great value. It's as low as it's ever been since the great financial crisis. Yes, and it's low for a reason. So would I be buying iRobot here? I would not. I would like to see, as you can see on the bottom, maybe the strength of the RSI starting to curl up. Again, we just showed why that could take a long time to play out if it does. If we go to the monthly, yeah, we had this monthly sell signal here and we went down hard, like 70%. So I would do some research on iRobot. If you're looking for a long value buy, this might be a company that gets maybe bought out or goes bankrupt. It is not looking good. And yeah, do your own research. But even if you see, I have an iRobot vacuum. I like it. I use it. However, even with that being said, this chart does not look good to me. Look at how far we've been declining since February of 21, and then it just fell off like a cliff. So, yeah, do your research into iRobot. Maybe you'll possibly get a good long-term value play, but right now things are not looking good for it. And any others over here? Let's move to Tuesday. Let's go to AutoZone and Lowe's. I'll pick up the pace here. AutoZone. Yeah, this looks like it's been a strong stock since the COVID dump there. And yeah, this stock looks very strong to me. I'm surprised they haven't done any stock splits in a while at this price. 48 billion value. AutoZone, I always see people in their stores. People are always going to need that product. I like their stores. I use them time to time. So, yeah, at the very least, if you like AutoZone, what you could do, zoom way out here, you can go to the monthly. And when we have monthly buy signals, you can just dollar cost average in then. Another thing you can do on some of these stronger looking stocks, I'm curious to see how often it's hit the 200 week, which is very rare. So if it ever hits these strong stocks, when they move up steady like that, when they hit the 200 week, you can see how rare of a time it is to buy. So this is since the dot-com bubble, once, twice, three, four, five. We've only hit under the 200 week 5 times. So any of these stocks like Costco, AutoZone, and others, when they're under that 200 week and you get that buy zone on a monthly, those can be two good dollar cost averaging techniques, or yeah, techniques, I guess, things you could do in order to just invest in a stress-free way. And guys, that's one thing I'm trying to promote on this channel is how can we make investing more enjoyable and stress-free. Here's a couple things you can look at right there, just how you invest and the method you use. That way you're not you want to take your emotions out of the game as much as possible. And if it's a strong stock when you like when you use, then heck, go into it. And let's take a look at Lowe's. We took a look at Home Depot last week. Lowe's, this might be another one of those 200 week moving average ones. Yeah, since the great financial crisis in 2011, when we were underneath it all this time, we've only had one 200 week buying opportunity, and that was the COVID dump. So yeah, there you go again. We'll get away from the 200 week. Let's just take a look at our buy sell indicators. We're on the monthly right now. It had a monthly buy signal at around 200, and it's moved up to 230. So overall, Lowe's looking pretty good. Something else to note is the RSI, the relative strength. This is one of those strong stocks where when it's under 50, at least on the monthly, tends to be a decent time to buy. Let's go to the weekly, see what it looks like. When this would be more when we get into that oversold area, when we're tapping down there at the 30. So if you would have bought any of these areas here when we're oversold, the 200 week moving average, good times to buy. Valued at 134 billion, moving sideways for a while. Maybe not the worst time to accumulate some lows when you get at the very least some of these weekly buy signals. Would I buy it right now? No, it's gone up a little bit. But as you can see, we do get these little healthy pullbacks. And after the next one, if we're still creating these higher lows and trending up, let's say it pulls back somewhere around 200, maybe not the worst time to buy. And Cracker Barrel. I don't ever want to go to Cracker Barrel. Beyond Meat. Let's check that one out. I have a friend who's a vegan, and he was talking about how he's buying Beyond Meat stock. Maybe I need to talk him out of it. This thing does not look good. It's just fallen. Now, down here you can see we created a higher low. And so on the weekly, we got those buy signals. I wonder if we haven't had a buy signal on the monthly since back here, and just falling knives. So guys, here's another thing. You can't just purely use indicators. It's just one tool in your tool belt. And this is exactly why, even when we get monthly buy signals, doesn't mean that we can't go down. So this is a good reminder of that. And yeah, I'm interested to see if this will start curling up. Maybe it's formed a bottom. It's valued at 500 million. It's turning itself into a penny stock company. Might Beyond Meat be a good long-term play? Maybe. Do your own research. If there's things that you find that you like about this company, and you think it can get back up to these 140 regions, well, that's a 20x multiplier if you believe it can get there in 5-10 years. So that'd be like saying you throw $1,000 down now, you believe it can turn into $20,000, then you believe it can get back here. Can it? I don't know. Do your own research. But right now the stock's looking pretty weak. The only bit of hope I can give you is the RSI is curling up, and we just made a higher low in the price. So we'll see. We'll see. I do not use Beyond Meat, so I won't be buying it. Any others? Maybe we'll check out AMC and Fubo, and I think be done because my body's slowly starting to die. Again, I apologize. I drank some tea. I've been doing lots of foods. AMC, oh my God, look at this meme stock. Look how it ran here from 12 up to 360. So good job if you got into AMC. Right here, this does not look good. I would not be buying AMC, even though it got a buy signal in the weekly. I don't care because it hasn't shown me the structure that it's looking like a healthier stock. Right here, this thing just looks like it's dying. And yeah, its market cap's about $1 billion. So theater stocks have not been doing great for a while. Yeah, that's AMC. Fubo. I think Fubo's one that has a pretty weak looking chart, if I recall. Oh God. So as you can see, since its IPO, look at that IPO. It was valued up here in the 20,000s. Is that correct? Because right now it's worth 518 million. I gotta math this out. I'm pulling out my calculator. So right now it's at a buck 77 per Fubo stock. But if it was at 20,000, we'll do this. 20,000 divided by a buck 77. So that would be saying that its market cap was 1,100 times higher than 518 million. What does that put us at? So this was once valued, at least IPO, almost $600 billion for Fubo TV. That is way too high. I don't know how any sane person would value it that much. Even the best streaming service there is. So Fubo just been taken for a while. I'm curious how many people bought in here when we were creating higher lows. Things are looking promising, and then it starts to just die off again. And here we are creating higher lows. Maybe things will start to look promising. I don't know. Do your own research on Fubo stock. Does not look good at all. It doesn't mean that there can't be good value. Maybe you use Fubo. You like their product. You use their product. Do your own research. What does their balance sheet say? What is their revenue compared to expenditures? How much extra cash do they have on the side? If you feel they're headed in the right direction, heck, maybe Fubo is one of those high multiplier stocks where you believe that it can do a 20x and you're ready to put 1,000 down on it right now. You feel strong about Fubo. Not financial advice, but guys, sometimes people can catch these. I would feel personally better about putting in the Fubo. Let's say the US was in a recession right now and the S&P already tanked somewhere like 30-40% and we were down at these levels. If we already tanked and the S&P is showing signs of turnaround and I see a company I like and use with a chart like Fubo's, then I would feel stronger about buying. The fact that we're still elevated in markets and still running up and we haven't had a strong downturn in a while, that makes me more cautious on some of these smaller cap growth stocks that if we did get a market downturn, my thought is, or my caution is, what's going to happen to some of these. So, anyways, I'm going to leave the video there. Take a look at some of these earning reports. Maybe some of these products are ones that you like, that you use. Check out their charts on TradingView. Throw up some of those indicators and see if there's any that you can dollar cost average into. Look at things like the RSI, if it's only dips in certain spots on the weekly or monthly, or the 200 week, those weekly, monthly buy signals. Anyways, hope you guys enjoyed. We'll see how these play out throughout the week. Take care. Bye bye.